So what is going on with the housing market? Is it a ticking time bomb, or is it a coiled spring ready to pop? You see all these headlines, and honestly, they tell a completely different story every single day. So today, we're going to cut right through all that noise. We're going to look at what the numbers are actually telling us.
I mean, let's be real. You've seen these headlines. They are impossible to ignore. A 50% home price crash by 2026. Wow. That's the kind of thing that's enough to give anyone a sleepless night. Doesn't matter if you're a homeowner, a hopeful buyer, or you're just keeping an eye on the economy.
But here's the thing. Is a crash the only possible outcome? Is that even the real story? What if, just beneath the surface of all those dramatic predictions, there's a totally different narrative taking shape?
Well, it turns out there absolutely is. And it all starts with something really unexpected. A little surprise that showed up right around Thanksgiving that, frankly, nobody really saw coming.
That's right. The Mortgage Bankers Association put out a report, and they actually called it a Thanksgiving treat. Right when everyone was bracing for things to slow down for the winter, the data showed this incredible, unexpected spark of life. So what did this treat look like exactly? Well, we're talking about an impressive 8% jump in mortgage demand. In a single week! A surge like that? Yeah, that definitely gets your attention.
But hold on, because that was just the appetizer. The main course? A staggering 20% increase in demand compared to the same time last year. See, this isn't just some one-week blip. It's a sign of a much stronger, much more important trend.
And all this activity, it pushed purchase mortgage applications to their highest point for the entire year. Let that sink in, right before the holidays. Does that really sound like a market that's about to fall off a cliff?
Okay, so what's the secret sauce here? What flipped the switch and caused this sudden and really powerful shift in momentum, seemingly out of nowhere?
The answer, as it turns out, seems to come down to one single crucial factor: the magic mortgage rate.
Okay, this is where it gets really, really interesting. Analysts started noticing a pattern way back in late 2022. It turns out there's this key tipping point for mortgage rates, both psychologically and financially: 6.64%. When rates dip below that magic number, buyer demand doesn't just nudge up a little, it jumps.
It's a simple but incredibly powerful two-step dance. First, mortgage rates start to come down, heading toward that 6% range. And then, almost like clockwork, the housing data starts to look a whole lot better. It's a direct cause and effect relationship that you can actually track.
So, that's the theory. But how does this pattern actually play out in the real world? Let's follow the breadcrumbs, let's look at the hard data, and see what's been going on since rates dropped below that magic threshold.
Okay, check this out. Since mortgage rates fell below that 6.64% mark, we've seen 10 weeks where mortgage applications went up, and only 7 weeks where they went down. So it's not a blowout every single week, but the trend is crystal clear. The positive weeks are winning.
And you can see it right here. The positive weeks are just consistently outpacing the negative ones. This isn't just random noise, it's a steady drumbeat of positive momentum, building and building over time, and it's all directly linked to that drop in rates.
And get this, that momentum has fueled an incredible 17 straight weeks of double-digit growth, year over year. 17. That kind of sustained power is a massive clue that something really fundamental is shifting in this market.
All right, so we've looked at the data, but what does it all mean? Let's connect the dots here and figure out why this specific trend is so important for understanding the bigger picture.
Here's the bottom line. The market isn't fundamentally broken. This data is like a flashing neon sign telling us there is a huge reservoir of buyer demand just sitting on the sidelines, waiting. These are people who want to buy homes, and they are coiled like a spring, ready to leap back into the market as soon as things get even a little bit better.
So what's the secret to decoding the housing market? Well, first, you've got to tune out those crazy, sensational headlines and look for the real signal in the noise. Second, focus on consistent data trends, not just one-off reports. And maybe most important of all, remember the golden rule. That relationship between mortgage rates and buyer demand is king. A single indicator, like that 6.64% threshold, can literally unlock the entire story. And that brings us full circle. We started with that chilling prospect of a crash by 2026, but now we've uncovered this powerful rate-driven demand that's just waiting to be unleashed. So, if rates do continue to fall, what does that mean for the future of housing? Are we looking at a comeback instead of a collapse? That's the billion-dollar question, and now it's one you'll be able to watch with a much, much sharper eye.